I'm Matt Bichard with REIT.com here in San Francisco for REITWorld 2013. Joining me for this CEO Spotlight is Jon Bortz, the Chairman and CEO of Pebblebrook Hotel Trust. Jon, thanks so much for joining us today.
Thanks for having me, Matt.
Let's start by talking about fundamentals in the lodging sector. How are things looking as we head into 2014?
Fundamentals are really terrific in the hotel industry. We continue to benefit from a limited amount of supply growth, which historically has always been the bane of the success of our industry. We're at relatively low levels, well below historical averages. We're forecasting about 1.2% supply growth for next year, and demand should exceed that probably by double, so somewhere around 2.5% next year. So we'll continue to see occupancies rise across the industry, and that gives us a decent amount of pricing power. Now, what's interesting about the business is, as you know, it's a local business. So the industry statistics are interesting, but it really depends what's going on in the market. And we're here in San Francisco, and what's most interesting about San Francisco is this market is really, really strong. We have no supply in the marketplace. We have really a core growth of businesses that are growing rapidly, as everyone knows. And as a result of that, we're seeing double-digit RevPAR increases here in San Francisco. And really, if you work your way along the West Coast, whether it's from Seattle to Portland to San Francisco to LA to San Diego, you're seeing very strong growth on the West Coast, little to no new supply, so even under those industry numbers, which are very small. Yet on the East Coast, it's a little more challenged. So we're looking at much more modest RevPAR growth along the East Coast. We have a little more supply in a number of the markets like New York and like Washington, D.C. And of course, we have lots of other issues in Washington that are causing problems. So it really is, we like to say, a local market where the coasts generally outperform the middle of the country. And for 2014 and probably for a number of years beyond, we believe the West Coast will significantly outperform the East Coast cities.
And given that there obviously are very locally specific issues, but if you had to look at the lodging sector as a whole, what would you say is the biggest challenge that still lies ahead? And what are you as the leader of Pebblebrook doing to kind of get ready for that? The
biggest issues are really the macro issues, the overall economy. Probably the biggest issue we've dealt with is this challenge we seem to have every year with our government in Washington, and the uncertainty that these crises from one crisis to the next creates. Our focus really within our portfolio is to try to mitigate cost increases, implement our best practices across our portfolio, use technology to increase efficiencies. We're making significant investments in energy conservation that are really good business. Typical return on energy investments are 25%. It's about a 4-year payback. So good for the planet, and at the same time, it's great business. So it really is a focus on what we call asset management, overseeing our operators, being actively involved so that when we get these very healthy mid to high single-digit revenue increases at our properties next year, it flows to the bottom line because we limit our expense growth to maybe 3 or 3.5%.
And picking up on that a little bit, your company's undertaken a fairly aggressive renovation program. What areas are you seeing the biggest return on those types of investments?
So in addition to the energy one that I just mentioned, which has been very significant, I think we've invested upwards of $15 to $20 million now in energy efficiency and sustainability initiatives. It really are these major renovations that we do at our properties, and many of these reposition properties either back to the higher level of performance that they were at before in more competitive condition, or in fact many times we take them to a higher level. And we have a good example here just a block away in San Francisco, a little hotel that we acquired in April of last year, which was called Hotel Milano. And we shut it down in November. We invested $14 million into the asset, and we reopened it as a very high-style, sort of latest evolution of boutique hotel. And it's doing terrific. And we found that in our experience with our renovations, design sells. And so we're very focused on creating an experience for our customer through these renovations that's unique, that's different than what you would get in a typical hotel like this one.
Jon, thank you so much for joining us.
My pleasure. Thanks, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.